Right, hello everyone, and welcome to another quarterly update by Apollo Capital. Lovely to have you with us today. My name's Tim Johnston, I'm Managing Director, and today I'm joined by Henrik Andersson, Chief Investment Officer, and Marc Woodward, Investment Partner. Hello Henrik, hello Marc.
Hi Tim.
Hi Tim.
So today we will provide an update on all things crypto, what's been going on in the last 3 months, last three hours, 3 weeks. It all moves pretty quickly in crypto, as we know, and it's a great opportunity for the audience to ask questions to the leading people of our investments team at Apollo. For those of us that are new to Apollo, we are a crypto asset investment manager. We've been going for a little over 4 years now. We cover most parts, if not all, of the crypto asset markets, from Bitcoin and Ethereum positions in our multi-strategy flagship fund, and we have some yield funds focused on yield farming and funds that sort of cover the whole array of crypto markets. So we also like to provide a lot of education and hopefully be a nice balanced voice of reason within crypto markets. We know that it can be quite complex, crypto assets, and we know that it can be hard to find trusted information. So that's part of today, as well as an opportunity for our investors and people that follow Apollo to ask questions. So please get those questions coming through. We don't necessarily need to answer them all at the end. We typically answer questions as we go along. And lastly, before we start, the obligatory disclaimer that today is not financial advice. We're just having a chat about crypto. So I might throw you to Henrik. What's been going on in crypto markets?
Yeah, fantastic. Thank you, Tim. So I thought maybe just start with a little bit of a recap on the macro situations we're in. I think we spoke about the macro in the last webinar as well. And I think the base case that we laid out in the last quarterly webinar has been playing out. So we have currently this fear of stagflation in the market, and that means that we are seeing higher inflation and potentially lower growth in the world. So, for example, the US just posted a 8.5% inflation number. That was the highest in 40 years. So that inflation number has been accelerating recently. That means that the market expects central banks in the world to increase interest rates. We also have the invasion of Ukraine in Europe, and we have supply issues in the world on the back of the COVID pandemic. So all this together means that the market is expecting lower growth ahead in the economy and potential higher interest rates. And this is important because it affects traditional markets, but also crypto markets. So that's the macro environment we are in currently. That means that share market, the stock market probably won't perform as good as it's been doing in the last few years. We have seen that playing out this year as well. The stock market has been going sideways mostly. Kind of on a big macro, kind of high level, it's probably good for commodity prices, which might benefit Australia, as Australia is a big commodity producer. It might be good for real estate. It might be good for other scarce assets. For us, this means that we have taken a little bit more conservative approach when we talk about our flagship fund or multi-strategy fund. We have a higher portion of market neutral allocation in that fund, between 15 and 20%. Last year, we had around 10% allocation to market neutral strategies. So we have been increasing that allocation. When we invest in new projects, I think it's more important these days to focus on real quality. We're also focusing more on generating yield with our assets. So that's sort of the macro environment we are in. That should also be, we should also keep in mind that we've seen increased capital flowing into digital assets, and we still believe that more and more assets in the world will move to digital, and we are playing in a very big kind of secular trend when it comes to crypto assets and the coming metaverse. So we have that positive sort of backdrop to digital assets as well. So that's a little bit kind of what kind of macro environment we're in, and then maybe we should highlight some of the big sort of news events we've seen in the crypto space in the last quarter. One of those was the executive order that came out of the White House. That was something that we had been expecting. We had expected an announcement from the White House. I think there was some worry in the crypto markets around that, what that could look like. The Biden administration, or some members of the Biden administration, has perhaps not been as positive perhaps to the crypto space in public comments as we have liked. But the executive order actually, I think, was on the margin a positive event for the crypto markets. I would highlight that they talked about responsible innovation and being able to kind of keep US as a competitive player in the digital asset space. So that part of the executive order was fairly positive, and I think the market reacted positive to that announcement. So we might see more kind of concrete actions on back of that executive order in the coming 6, 9, 12 months. When it comes to closer here to Australia, I think we have continued to see a lot of activity when it comes to crypto markets in Australia. And more recently, just in the last few days, we've heard a lot about a potential ETF coming soon to Australia. And then we are talking about Bitcoin and perhaps ETH specifically. So we do expect to see that very shortly coming out of Australia, which is a good development. Finally, ASX is getting ready to list the first ETF in Australia. Previously, we've seen those being listed in specifically in Canada and also in the US during the last year. So I think that's positive. When it comes to kind of more, were you about to ask a question, Tim?
Yeah, I was going to just on the macro side, Henrik. You've been in crypto markets for a long time now. Personally, I believe since 2013, and with Apollo, since early 2018. Have you seen in 2013 what you explained before about interest rates affecting crypto markets? Like, I imagine that was not happening in 2013, but we're in 2022 now, and it is happening. And so, is that a trend that you've seen over the journey, and that it is happening more and more and more, and maybe one that we might see more into the future?
Yeah, sure. So I think we have spoken about that a lot previously, Wes, when it comes to correlation between crypto and kind of global financial markets. And we have done a lot of analysis and research on that ourselves as well that we have published. And I think it's fair to say when the crypto markets were a lot smaller, it moved more independently to other markets. For example, at the end of 2013, beginning 2014, there was one specific event that really affected crypto markets a lot, and that was the bankruptcy or closure of Mt. Gox, which was the dominant exchange at the time. So you had those very crypto specific events that really affected markets in a very, very big way. And, crypto markets, Bitcoin specifically as an example, reached over $1,000 at the end of 13, and a couple of years later was trading at $150. So, and that was driven by an event like Mt. Gox. And obviously, as the crypto markets are growing and we have much more assets, Bitcoin has decreased in dominance last few years. Those kind of specific crypto events are less likely to affect the market as much. But I mean, crypto markets is still a fast-growing market and relatively small to other global macro assets. Mark, would you agree in that assessment as well?
Yeah, absolutely. I mean, I think the era of the easy money has sort of come to an end. Investors have certainly priced in interest rate increases going forward. The market does seem like it is stabilizing, and it really is more about supply chain issues and stagflation, as you highlighted.
Interesting. Yeah, I mean, at the risk of answering my question a little bit, we did a paper throughout the quarter, which compares the correlation of crypto assets to your traditional equities from an Australian investor's point of view. And I think and then that's on our website under the insights page. And the analysis from that was that over a period of time, it still looks like crypto markets are not correlated to traditional assets. But I think the last 3 months for me has been particularly interesting because it sort of seems like we're sort of in this sideways sort of trend of not much happening in traditional markets and not much happening in crypto markets from a price point of view. So I think I think that'd be really interesting to analyze that over the next coming quarters.
Absolutely. Maybe looking forward as well. So we have talked about a few events sort of that happened this quarter, but looking forward, I think that we have some very big events happening as well that could affect crypto markets quite positively. One of them is Ethereum's upgrade to proof of stake, the so-called merge, Ethereum's biggest upgrade to date. That is likely to happen within 6 months or so. And that will have some immediate effects on Ethereum and some longer term effects. I think the immediate effects we will see is that the inflation in Ethereum, the new issuance of ETH, will decrease a lot when that happens immediately. So we will likely see Ethereum turn deflationary when that happens. So you might have a negative issuance rate of a couple of % in Ethereum from starting at the merge, which might be in 6 months from now. The date of the merge is still a bit uncertain, but I think 6 months is probably our best estimate right now. So you will see that big reduction in issuance. You might see the yield for being an ETH staker to run a full node and validate transaction, that staking yield might go up quite significantly. So today it might be 3-4% for being a staker in ETH. So Ethereum has already some proof of stake in the Beacon chain, but the whole chain will move over to that. And that means that Ethereum will not be paying miners anymore. So all that new issuance will go to, and transaction fees will go to stakers, and that yield might go up to 8-10% for staking. So we're bullish on that that part of Ethereum, and we're investing in liquid ETH staking protocols. So that's positive. What we probably want to see is that fees will go down. So that's will not happen, I think, on the base chain anytime soon. So the move to proof of stake will not mean that transaction fees will necessarily go down. So that's perhaps somewhat of a misconception that some people might have. Instead, I think we will see more L2s, so more transactions will move to those L2 rollups and zero knowledge rollups, and that's something that we are expecting as well. That kind of a big increase in usage of rollups. We think that some of the rollups might issue tokens quite soon as well, which might fuel that kind of growth in L2s. Perhaps we will see that being a very big trend this year, actually. And historically, we saw 2020 being a big year for DeFi, 2021 being a big year for NFTs. Maybe we're going into L2 summer. So that's pretty exciting. So a lot of things happening on the Ethereum side.
And Henrik, is that a catalyst for? I mean, we're seeing a lot of activity on Ethereum competing chains as it is, but as Ethereum is delayed again and again, and I was listening to a podcast recently, and they questioned why it takes so long, and I think the answer was, well, have you ever been involved in an IT project which was delivered on time? It's especially true for a blockchain where you've got thousands of transactions which depend on it. So you understand why they need to take so long, but does that create more of a gap, if you will, for the other competing Ethereum smart Ethereum smart contracting platforms to, to chip away at Ethereum's lead?
Yeah, I think that's what I've seen as well. The last couple of years, we look at the smart contract sort of market share. It used to be very high for Ethereum, obviously 95+%, and that has declined, and maybe today 65-70%. So other platforms have been taking market share from Ethereum, like Binance Martian, Polygon, Avalanche, more recently Solana, and others coming as well. So we have absolutely seen that, and I think what Ethereum is betting on in the short term is this L2 technology,
right.
And that is sort of a modular approach, which a lot of people in the industry think is the right kind of scaling approach, because even for the competitors, it's very hard to scale those chains unless you have this kind of multiple layers.
So if the main plague or problem for Ethereum is the high transaction costs, and the upgrade is not going to solve those transaction costs, the upgrade is really more focused about the mining algorithms, which moves to proof of stake. So the upgrade isn't necessarily going to lead to a dramatic improvement in Ethereum's like issues, if I understand that correctly.
Correct. Those will be addressed by the L2s. So we are bullish on L2s like Optimism and Arbitrum and ZK Sync and Starkware kind of L2 technologies on Ethereum. So that's still kind of early days for those, but they're coming live now. And as I mentioned, some of them might very well issue tokens that might, fuel that growth in L2s.
Great. And to the audience, if you've got any questions, please keep them coming through. You can either use the chat function, or I think there's a Q&A function as well. But obviously a great use case for Ethereum is NFTs, and Marc is our resident NFT expert. So Marc, what's been going on in the NFT space?
Sure, but thanks, Tim. Yeah, so just to answer a question sort of preemptively, we don't invest as a fund in individual NFTs or individual games, but we do certainly like to keep track of trends, simply because they affect some of our other investments, whether that's in layer one blockchains or other things in and around DeFi. So despite the extreme volatility in the broader crypto asset markets, NFTs had a very exciting and very positive quarter. The estimated value of NFTs is around $20 billion. And that's continued to trend up even as sales volumes have fallen slightly during the quarter. Now, I know that sounds like a lot of money, but it's about 1% of the overall crypto asset market, which is about $2 trillion. So still a very long way to go, despite the immense press and attention that NFTs get. And so I think continuing on from what we've been talking about in the last couple updates is that the attention and activity, continues to be around these PFP style NFTs. These are called profile pictures or picture for proof. So these are NFT collections like CryptoPunks and Bored Apes, and a new collection that launched this week to a lot of fanfare called Moonbirds. So this is as opposed to the, what a lot of people, when they think about NFTs, they think of these static artworks from an artist like Beeple or Pac or Trevor Jones that sort of have a, they're more static, but they sort of have a singular value proposition. But this is because these PFPs are developing much more utility and rewards. So for example, if you own a Bored Ape, you're a part of a community of other similar collectors. There's a potential for an ecosystem and IP ownership rights when you own a Bored Ape. So you can take that Bored Ape and go create a cafe, which one collector has done. And there's even financial rewards for owners of these PFP NFTs. So the issuer of Bored Apes, Yuga Labs, did an airdrop of a new token called Ape to all the owners of these Bored Ape NFTs. So Ape now has a market capitalization of $5 billion. And this value was largely airdropped or just given to collectors. That's pretty amazing for just owning a digital picture. And now there's even rumors of them doing a land sale. So creating sort of a virtual world where collectors of Yuga Labs PFPs can interact and own labs or own land and build structure. So that's very exciting. So we can see this broad trend around NFTs growing up more around an ecosystem, and also the financialization of NFTs. And so when I say that, I mean where collectors of a certain artwork can receive additional rewards for that ownership, whether it's a token like Ape, or it's being able to generate yield on a platform where they have deposited their NFT. And so a good example of that is LooksRare, which is a competing NFT platform to OpenSea, which is probably the market leader in the space. They've been conducting a very aggressive rewards program to try to attract collectors to list their NFTs and trade on their platform through their rare token. And so they even launched a new one today, even more rewards if you list any collection in the top 25 that they have listed on their platform. So this is very similar to what we see in DeFi, where certain platforms will offer rewards to be able to attract liquidity, right? More liquidity means a more efficient pricing mechanism, obviously more supply, and that's going to attract more buyers. And so it's very interesting that these users of these platforms can now generate or can be rewarded as opposed to just paying fees for using this platform. And so the final thing I'll say here on NFTs is that Coinbase, which is the largest US exchange, has finally launched in beta their new Coinbase NFT platform. So Coinbase has 90 million users, $300 billion in crypto assets. They trade $500 billion US each quarter. They're well known for having a very simple, very easy to use UI and introducing crypto to probably the broadest audience globally in crypto. So it's going to be more of an Instagram, social media-esque platform initially, where users can connect their wallets and show off their NFTs, and other users can comment on them, can like them, can share them in their feeds, and will eventually grow into more of a marketplace. So some very exciting stuff happening in NFTs, and we're certainly going to be keeping abreast of it going forward.
And Mark, I saw a headline. I didn't go too deep into it about Bored Apes going to Hollywood. And I have been speaking to one of our investors who's very passionate about collecting. I can't remember the actual collection, but there was a ties to Hollywood as well. So is that another trend that we might be seeing, where I could own a Bored Ape, and that's going to be potentially in some sort of Hollywood mega production, in some film. Is that a trend that might be coming?
That's absolutely right, and it's sort of a competitive creative process. So you would have to come up with the identity and and the personality of your Bored Ape, and potentially give it a backstory, write some lines for it in the movie, so you get this sort of collaborative, decentralized process in terms of creating new entertainment. So you're actually going to own this IP around a character. I mean, imagine owning sort of Tom Cruise or something like that in films, right? So if you have the most successful Bored Ape that everybody wants to see and they enjoy seeing them, you'll be able to reap additional rewards. And that's just another example of when you own this NFT specific to Bored Apes, you actually own the IP around that character as well, and you have free usage globally, which is pretty innovative.
Or you could own the IP around like Darth Vader or Luke Skywalker or something like that potentially.
Yeah, it's going to be more around sort of an animated character, obviously, but for sure. I think that's a general goal, and that's what makes it so exciting and so much more engaging for collectors as opposed to other types of NFTs. So we're seeing just huge innovation, new ecosystems, new ways to generate revenue and rewards around these NFTs.
Yeah, and then one of the big headlines, I guess, was the acquisition of CryptoPunks by Yuga Labs in the quarter, and I think they're giving the IPs to the owners of the CryptoPunks as well. So that's a really exciting development. You can actually own that IP. I think that's really fantastic. I think a lot of people are thinking of, or some people are thinking about NFTs like this bubble, but I think our view is it's only early days and a lot of experimentation going on, and we have only sort of scratched the surface of use cases for NFTs. You have the whole music industry, potentially whole the gaming industry, and obviously the metaverse as well, where NFTs will be big.
And even zooming further out, I mean, crypto in general, right? I mean, that's been sort of part of our thesis from day one, is that there's going to be all sorts of novel use cases, and it pays to stay abreast of everything that's going on. A couple of questions coming in. What is Apollo's opinion of Anchor, UST, and Do Kwon?
Yeah, so we have invested in decentralized stablecoins for a long time, and we have been very, very bullish on those. So we are bullish on UST, which is Terra USD. We are bullish on Frax and Fei, and also on DAI, which is one of the oldest sort of decentralized stablecoins around. So I think that's a sector that we've been quite early in, and I think we've been mostly right as well. We've seen a huge growth in that decentralized stablecoin area, and the growth of UST has obviously benefited our investment in Terra and the Luna token, as when you mint UST, you're burning Luna. So there's some interesting tokenomics going on there as well.
And Do Kwon?
Do Kwon, he's Bloomberg wrote an article about him this week, which I thought was interesting, that he's now the big Bitcoin whale, because their goal is to acquire $10 billion worth of Bitcoin, and that would put LFG, which is the foundation that is set up to kind of control some of the collateral for UST, as one of the biggest Bitcoin holders in the world. So it's been perhaps bullish for Bitcoin as well, as UST is using Bitcoin as a collateral for UST, and Do Kwon has risen, I think, in prominence in the crypto industry a lot the last few months.
Yeah, I think I saw one of your tweets during the quarter, Henrik, which was probably a good thing and a bad thing for Apollo. The tweet was, I think we rejected an initial investment back in 2018, if I'm not mistaken, which is great, which shows the access that we can get at Apollo. But maybe we should have accepted that one. I think the valuation was a little bit high at that time.
It seemed very, very extreme. Obviously, it was very painful today to look back at that. But I think it shows that we were quite early in looking into these decentralized stablecoins that are coming out, and luckily we reversed our decision, and we are now holders of Luna as well.
Yeah, and it's investing. You can't get 10 out of 10. So another question from Brett. Hello, Brett. How is your Pocket network investment looking? I'll let you, Marc or Henrik, I'll let you work out who wants to take that one.
Marc, do you want to take that one?
Yeah, sure. So if you're an investor in the fund, you may have seen some of our research on Pocket. We're very bullish on the long term of Pocket. So what they've done basically to bootstrap both sides of their network is to have a relatively high inflation rate, where they incentivize node operators to stake the token. So these are people that have either invested in the seed round, like Apollo Capital, or who have bought Pocket from one of two exchanges where it's traded, to stake about 15,000 tokens to create a node, and therefore you become a part of this relay network. So you have this huge supply. I think it's now over 43,000 nodes, which has grown astronomically over the past 6 to 9 months. So you have this huge supply, this huge sort of bandwidth of decentralized network. And then on the other side, they're aggressively courting new chains to add on to the onto the network, like Polygon, Harmony, Ethereum, and others. And so at the moment, these chains don't have to purchase it. So the foundation of Pocket is providing the required staked amount, so these chains can access the network. So we're going through this inflationary period where both sides of the network are being incentivized. Longer term, I think we're very excited. The number of relays, I think, is up over 800 million each day, which again has also grown astronomically. So I think over the long term, we are quite positive and bullish on this project. They seem to be, the leader, if not the only one in this space doing exactly what they're doing.
Very good. And as Mark touched on, there was I think I'm not sure if it was a research paper or a blog or insight on our website about how we've hired a developer, Paul, who's part of the investments team, who's actually been able to code up some and operate some nodes to sort of receive some free POCT for the Apollo Capital funds. So it's not free. There's obviously infrastructure costs that go into that. But I think that's a pretty exciting development from the Apollo Capital team side in terms of adding capabilities to the team. So that's been, there's more information on the website if people are interested in that. Hacks, always hacks going on in crypto. So this question from, I've seen a lot of press regarding hacks with certain protocols, wormhole attack and the Ronin Axie Infinity hack. So Henrik, maybe you just got some general thoughts around that and what are the steps that Apollo is taking to ensure funds don't get stolen?
Yeah, absolutely. So yeah, we've seen, especially when it comes to bridges, I think this year we have seen the Ronin hack, which was a hack on the bridge to Ronin that was not secured properly. It was, as I understand it, a weak multi-signature setup. We also had a wormhole, which is also one of those bridge protocols that got hacked. I think in both cases, it's important to say that I believe that the users that got funds stolen, they're getting compensated completely, both in the Ronin hack and also in the wormhole hack. So we're actually not seeing users in those cases losing any funds, which I think is an important point to make. The same, I think we've seen with kind of the most reputable exchanges as well when they got hacked, which happened to Binance, for example, that the users got fully compensated. So yes, we are seeing hack. We have always seen that in crypto. I think more recently we're seeing users getting compensated. But security is something that is of extreme importance in crypto, and something we are taking very seriously as well, all the way from custody to researching the protocols where we deploying funds.
I was on mute. It's a question from Kenny. G'day, Kenny. What's Apollo's investment thesis on the play to earn space, either direct investment or into their respective tokens?
Yeah, Mark, do you want to take that one as well?
Yeah. So as I mentioned earlier, this is one of our areas that we look at, sort of in the NFT, Web3, and metaverse space, where we don't invest in a specific game or NFT project, but we will invest in the infrastructure. So one specific project that we've invested in now twice in their seed round is an Australian project called Parian, which is a play-to-earn gaming guild. Started here in Australia, again, that we incubated and that Apollo Capital is an advisor to. It's a similar value proposition to Yield Guild Games, which is probably one of the most well-known PDE gaming guilds involved in Axie Infinity and others. So we've invested again at the seed round, and they did a subsequent round, which we've also invested in. So I think generally we are optimistic and positive about that space, certainly supportive of Parian, and are continuing to look in that space for additional infrastructure investments.
Another question, looking forward into Q2, Q3, what's the Apollo view and positioning? Are you expected to be more market neutral? And when do you expect to turn more constructive?
Yeah, I think it's fair to say that if the expectation changes in the market, so if suddenly we are expecting a 2% inflation rate, we see some supply issues getting resolved, we see the geopolitical environment in Europe change, then we will become more constructive as well on the market. So you always have to kind of be flexible and be willing to change your view as the information changes and as the market changes. So I think that's the right answer to that question. And right now it looks like there is fear for stagflation, and the base case scenario is global markets moving sort of sideways. We will still be, as a crypto investor, as an active crypto investor, I think that's probably the best environment for sort of a crypto stock picker, if you like. If you have a strong fundamental thesis, then there's nothing wrong with the sideways markets necessarily.
Yeah, I think I would just add there, to what Henrik said, is that, we've seen a lot of black swan events, both sort of in the positive and the negative in the crypto markets, incredibly challenging to forecast. So having this long-term fundamental view is really the only way to go. So, if we get a positive outcome with a Bitcoin or Ethereum ETF in the US, or some regulatory change, as opposed to some of the lawsuits that are ongoing with the SEC in that market, whether there's a peace in Ukraine, any sort of progress on inflation or easing of supply chain issues, those could very quickly resolve into a more positive market. I mean, clearly there's a lot of capital still on the sidelines, a lot of stable coins, in the crypto markets, but continuing to see huge amounts of interest across crypto assets from retail institutions, corporates, NFT and metaverse, new funds being raised. So it really does, the background is, I think, very optimistic.
Pretty good. Thank you, guys. And Sani, I have a question from here. Sani, hey Sani. Hopefully that answers your question as well, which is about if markets were to move sideways or a global economy to slip into recession. If not, Sani, feel free to send me an email and I can get you more information on that. Got a fairly technical question here from David Jones. You mentioned interest in FRAX. Backruns are always the concern for decentralized stablecoins. Do you see the floor pool as a stabilizer for FRAX?
Yeah, absolutely. I think so. Floor pool, maybe a step back and explain what that is. So floor pool is a new pool on a protocol called Curve. So Curve is the biggest DeFi protocol in the world with around $20 billion in locked value. They're operating on multiple chains. One of their biggest pools in the past has been the so-called tree pool, which contains DAI, Tether, and USDC. Now we are seeing the creation of the four pool, which is not including DAI, but instead UST, so Terra USD, and FRAX, as well as Tether and USDC. So this is a quite big shift in the stablecoin market. If the four pool will become successful, I think there's a big chance it will. Because of the incentives around FRAX and USD Terra. So this has been great for FRAX because they are sort of cooperating, if you like, with USD Terra, which has been extremely successful and reached $17 billion in locked value. So it's a very interesting development. I agree with with David Jones here that it's probably negative for DAI, positive for FRAX and UST.
Good. Thank you, Henrik. And I think we've got a couple of minutes left. So if you have any last questions, feel free to shoot them through. We've got Chris here. You mentioned GameFi. Do we have any opinions on Step N? Is it a token?
Yeah, it's a token. I think the token is called GMT. It's a Chinese project. Sort of very, very, very hype token. I don't have a strong view on it. I don't know if Mark has any opinion on this one in particular.
I
don't, unfortunately.
That's okay. I like it when we get questions about have you heard of all these different tokens. It's great because there's so much going on in the space. Well, I think that brings us for a wrap today. Thank you, everyone. Thank you, Mark. Thank you, Henrik, for your insights. Thanks for all the questions. Thank you to everyone for joining in. We'll look forward to seeing you again in another quarter's time. But as always, we have a very transparent approach. If you have any questions, feel free to reach out to a team member or through the website. Have a good day.
Thank you.